Hey, what is going on? If you own a power washing business and you are trying to grow and scale it, then you are in the right place. And today I've got an awesome video with a guy that has also been in the industry for a while. He's owned multiple service companies, power washing companies, so on and so forth. And he is an absolute wizard with the numbers side of things. Kind of a little bit boring sometimes, but that's where all the strategy and the real growth comes from, is by understanding, your finances, your numbers, and being able to make great decisions based on those. So without further ado, let's go ahead and jump into the video. What is going on, guys? So I have a super special guest today, Mr. Dan Platta. He has been in the home service industry for a while, and he is a wizard with the numbers and finance side of things. So welcome, Dan.
Thanks, Caden. It's good to be the in-house nerd here. I love it.
Somebody's got to do it, right?
Yeah, man. And nobody else wants to do it, so it's perfect. It's like, small fish, big pond, or big fish, small pond. I don't know which one, but yeah,
well,
I'm that weirdo. So
yeah, it's an important piece of business, that is for sure. So for those of the people that don't know you, do you want to tell us a little bit about who you are, what you've done, your story, your background?
Yeah, man. So I did like 10 years in the corporate world by accident. It was like one that I got out of college and then got a job in the corporate world, and all of a sudden I was like, oh shit, I better get out of here. But I enjoyed my time there. I learned a lot of stuff. I did some accounting there. I did some trading and hedging and risk management stuff and cool stuff. I did some M&A stuff. And I said, this would be way more fun doing it with small business owners than doing it in a huge corporation. And so I joined a company called Blue Skies back in 2016. And at one point around then, I think 2018 was probably when we had our most companies, but we had 10 different home service companies around the country that we managed. Mostly window cleaning and pressure washing and maid service companies. And then we totally by accident started an administrative company. So we did what we found with all these different companies around the country we were running is the bookkeeping, the super nerdy stuff kind of was a central activity, right? The recruiting tended to be a central activity and the marketing tended to be a central activity. It was all stuff we could do digitally and remotely from a home office situation. So we built all these systems and processes for our 10 companies. And then somebody was like, hey, can you guys do that for me? And we were like, yeah, right. I guess. And then I'm from Wisconsin. So then the next thing was like, well, what do I owe you? And I was like, probably a case of beer would be the first form of payment. So I think the first thing we ever did, we got paid a case of Busch Light for. But so we built this awesome bookkeeping company and recruiting company, which I just left a couple weeks ago to start my own thing. Cause like I said, it was totally by accident. I had 3 partners in that business. So we built a really cool business, but I didn't own it all. And I said, well, I should probably if I'm going to be this bookkeeping nerd, I should probably just, own it all. So I just exited that and am still buddies with those guys, and it's still an awesome business. But now I started a new bookkeeping company called Best Damn Bookkeeping, and it's edgy. And that was the whole point. It was either, as I was deciding what to name it, it was some figment of the best damn bookkeeping company around, which my buddy Bobby Walker had thrown that out to me as an idea. And I was like, I like it, but that URL is just a little too long. So I shortened it down to Best Damn Bookkeeping. And the other one that I was going to go with was bookkeeping, which is just it's just fun. I want it to be fun,
Yeah.
right? Bookkeeping doesn't need to suck. It's a super important part of our businesses. So we got to make it not sucky. But I didn't go with that one because I did have 2 clients that had a stutter. And I was like, man, this is just really funny until I'm a total asshole. And so I stayed away from the bookkeeping. And we just went with Best Damn Bookkeeping.
Yeah, so. And it's prolific enough that it stands out. So that's awesome.
Yeah, that's awesome. The bookkeeping can be a tagline. That can be a tagline.
That's true. That's true. Yeah. Work them together, right?
That's right.
Well, awesome. So in this group, most of us power washing, some window cleaner, stuff like that. What would you say are some of the most important things that we could keep track of as far as finances and that stuff?
Yeah, man. So first I'll say bookkeeping is such a boring ass word. And as business owners, we definitely didn't start pressure washing or window cleaning or whatever it is that we're doing. We didn't start that business to keep track of all of our shit. We usually started it because there was a path of least resistance thing where either it was easy to get the supplies to do it and we could access somebody that could teach us how to do it and what to spray on this thing, what to spray on that thing. So we got into it usually from an operational standpoint of I can go do this and make money doing it. The keeping track of the money and how to do that and when to do it and what to do with it is usually like highly avoided by most of us, right? Like we look at our bank accounts and then we look at that and we use our gut and we just make decisions.
Yeah.
What tends to happen is as our business grows, especially as we start to hit like 100,000 in revenue and 200,000 in revenue, and we start getting people to help us, right? We bring on a helper or whatever the case is. All of a sudden we're like, oh shit, where's my money going? And it's like, it happens to every single one of us every single time. And we're all going to keep running into that. And what happens is we don't have bookkeeping, right? And we avoid it for like as long as we possibly can, because who wants to open up their QuickBooks on the weekend and like do their bookkeeping? Like I do, but I'm the only one. I know I'm like the only one. Yeah, nobody else. But so when we look at our financials, especially as we start adding resources and scaling our business, whether we're adding people or we're renting a location or we're spending more on marketing, all of a sudden like the nerdy bookkeeping stuff becomes the number one tool in our business. We're not, as we start growing the business, we're no longer in the business of pressure washing. We're in the business of making decisions. Every single thing we do in our business as we grow it is a math decision, which kind of sucks because I'd say probably more than half of us hated math. And now like to our detriment, we signed up to play a math game. Like if you are a business owner and you hate math, that's a conundrum for you. That is a problem for you. Like you signed up to play a math game. It's not about spraying water on stuff. It's about the math and how do you make more money with your money. And that's where bookkeeping comes in. So I think bookkeeping gets a bad rap or just a boring rap. And that's like, oh, it's nerdy accounting stuff that my CPA needs. But for me, as a guy that ran these businesses, and I still have investments in this space, like I still play CFO for our businesses, this is like the number one tool in our business. This is more important than the pressure washer we have. How do we even know what pressure washer we should have? Which one's going to make us the most amount of money? It's a math decision. It's a bookkeeping decision, right? So the numbers start to become a super cool tool in our business and not just boring stuff. I do have, Caden, I've got Platta's 5 financial fundamentals that I can rip through. Less about the bookkeeping stuff. The nerdy bookkeeping stuff can wait a little bit. I'm just trying to rant a little bit and say, don't ignore it forever. But there's some stuff that we should all do right from the get-go. Or at least, not that you need to do these things right from the get-go, but you need to know that they're a thing that you need to do and that you will severely regret it if you don't do these things. The longer you wait to do them, the more that, can I swear on here?
Yeah, you're good.
Perfect, because I'm a loose cannon. The longer you wait, the more exacerbated your fuck is going to be. Right? Like it'd be nice if it's just like a fuck, but if it's like a fuck, like if it's a long drawn out F word, like the longer you wait to do these things, the more longer drawn out your F word is going to be when you realize how detrimental it was. So number one, I mean, if you're just starting out, separate business and personal. Get an LLC set up, get a separate bank account set up. You can't have good data in your business and know if your business is making money if you treat it like a hobby. And Caden, I don't know about you. I know you had a pressure washing company. I've got pressure washing companies. There's thousands of pressure washing companies in your group. This is just a wild allegation here. I'm going to make a bold assumption that none of them are nonprofits. I don't know if you agree with me or not. I don't know if you agree with me or not, but I'm just like going bold where no man has gone before. And I'm going to say nobody in here is a nonprofit. I think you're correct. Okay. I'm guessing everybody's here to try to make some money. And if you're mixing business and personal, you can't tell if you're making money, right? And so if the point of this is to be a for-profit entity, which for the love of God, it better be, make sure you separate your business and personal stuff so you can tell if you're making money. Super important to tell if you're making money and obviously protect your risk and that sort of thing. But so number one is separate business and personal stuff, set up an LLC, make sure you have separate bank accounts, separate credit cards, all that stuff. The second thing that and this is kind of one of those things where it's, and I'm looking at my other screen here because I actually have like notes on these. This isn't right for everybody, but it's right for most people, which is don't be afraid to use debt in your business. A lot of us, there's like an ego thing with like, I paid cash for my truck. And I will tell you from a finance perspective, that's probably one of the dumbest things you can do. And
That's
yet,
the thing, right?
yeah, I mean, it's like there's a lot of pride in it. I totally get, like, I bought that thing cash, right? But it's just a math decision. And if you just spent $50,000 on that, that's $50,000 you don't have to spend on marketing and recruiting. And the asset doesn't make you any money. The truck and the equipment doesn't make you any money. What does make you money is the customer and the person running that equipment. And if you're going to grow a business, the equipment is the last thing you need. First, you need a good employee. Second, you need a good customer. Third, you need good equipment. But you, as like the first employee of the business, I bet you could go out and outproduce most people with a 2-gallon per minute machine from Home Depot, right? If you give a shitty employee a 10 GPM machine, they're not going to outproduce you with a 2-gallon per minute machine. The employee is the valuable thing, not the equipment, right? Eventually, the business will pay for really nice equipment. But my point being, don't be afraid to use debt to finance that vehicle. Now, again, not for everybody, right? Using credit cards isn't for everybody. But in general, if you tie all your cash up in a truck and you don't have money to spend on the marketing or the recruiting to grow the business, that truck's going to be sitting idle, right? Or you're not going to have the money to spend on marketing and you're just going to have a sweet ass truck, but you're not going to have enough work to do on the schedule. Put 20 grand down on that $50,000 truck, have a $30,000 loan, use that other $30,000 that you didn't just spend on it to go grow your business. Spend it on some marketing, spend it on some recruiting, spend it on an admin person to answer the phone for you. You will be so much farther ahead if you use debt wisely. Don't finance everything to the hilt. Finance your big assets. Finance your vehicle. If you've got a big trailer or a skid or something like that, don't be afraid to finance that. That thing only makes money when it's out working. And so save your cash flow to spend money on marketing and other things to make sure those assets are out working. Number 3, Platta's 5 financial fundamentals. As you start scaling your business, you're probably going to have a CRM. We use Service Monster in our business. Shout out Service Monster. I love Service Monster. They don't pay me to say that. I really like Service Monster. But we've used Jobber before. We've used Service Autopilot before. I've played with Mark8, Customer Factor, House Call Pro, all of them. You're probably going to have one. Whichever one you like, they're all a little bit different, right? You're going to have a preference of whatever you like. For the love of God, do not sync it with your QuickBooks. You're probably going to start a QuickBooks because you're going to think it's something you need to do, which at some point you probably do. And when you get your CRM going, it's going to be like, hey, put your username and password in here. And you're going to be like, oh, this must be the right thing to do. Otherwise, they wouldn't tell me to do this. And it's the worst thing you can do in the history of bad things. If you've done it before and then you've looked at your QuickBooks afterwards, you probably know what I'm talking about. It's going to totally jack up your accounting system. It's going to duplicate all your sales. It's a nightmare. You're going to have to pay somebody like me a whole shitload of money to fix it for you. So don't connect your CRM with QuickBooks. Unless there's like one caveat. I'm not even going to get into the caveat. Just don't do it. All right. Now we're getting into like a future thing here, which is if you're starting to do over 100,000 in revenue, if you're pushing that number, the net income from your business is probably somewhere between like 25 and 50,000, depending on assets that you bought and that sort of thing. Once the business has a net income, that being like revenue minus all the business expenses, once that starts tipping over like 25,000 plus, you want to be taxed as an S corp. It doesn't mean you want to be an S corp, right? I already said earlier, set up an LLC, separate business and personal. When you set up an LLC, you're going to be taxed as a sole proprietor first. And sorry for this boring nerdery stuff here. I'm not a CPA. Yeah, this is super important. This is like thousands of dollars back in your pocket important. And you won't know that you're missing the thousands of dollars until you set it up this way. And then you're gonna be like, fuck. Like the longer you wait to do this, the more money the government's going to take from you. So when you're an LLC taxed as a sole proprietor, which is what you're going to be right off the get-go when you set up an LLC, they're going to tax you on the net income of the business. The first thing they're going to do is payroll tax you. And as business owners, we all have the privilege of paying self-employment tax penalties, meaning not like they send us a penalty check, but we are the employer and we're the employee. And so we pay the payroll taxes of both. And that's like 7.5% for both. So you're out 15% for payroll taxes, and then you pay income taxes. Like it's 2 different taxes, but you're going to pay both. Now, the reason to be taxed as an S corp is because then you put yourself on payroll. Like you got to have a payroll system. You have to take a wage. When you take that wage, that gets payroll taxed, but the net income doesn't. So just high level example, and I'll use round numbers because doing math on a live feed is dangerous. But let's say your business made $100,000 of net income, which is feasible. Like if you start doing 200 to 250,000 in revenue, you're probably going to net 100,000. Now don't get fooled, because when you're doing $1 million in revenue, you're still probably going to net about 100,000. You just have a whole lot of other problems in infrastructure. I have a presentation called The Purgatories of Scaling. We can do that on a different live feed. And that's a funny one, because everybody that's ever gotten to $1 million is like, what the hell? Like, I thought I'd be making so much money. Instead, I just have a ton of work to do, and I make the same amount of money that I did at 250. But so let's say you're at 200, 250 in revenue, 100,000 in net income. Again, if you were a sole proprietor, you'd be paying 15%, so like $15,000 in payroll taxes, then income taxes on the remaining 85,000. That would be if you're taxed as sole proprietor. If you're taxed as an S corp, you would take a paycheck of 50,000, let's say. You don't take all the net income as a paycheck, you just take like half. You would now only pay payroll taxes on that 50,000. So instead of paying 15,000 in payroll taxes, you'd pay like 7,500. So that's where the thousands of dollars comes from, is like your payroll taxes gets shrunk. Now, you're still going to owe income taxes on both that paycheck that you took and on the 50,000 remaining net income in the business. So you're actually going to owe a little bit more in income taxes, but not nearly as much as the $7,500 you just saved on payroll taxes. So the S corp thing is a how you're taxed thing. LLC taxed as an S corp. There's a IRS form 2553. Now I'm getting super nerdy. IRS form 2553 that you would fill out to get that done. If you're in this ballpark, do it after January 1st, before March 15th. File that form, get yourself on payroll, save thousands of dollars in payroll taxes. You probably got questions, not you, Caden, but just listeners probably have questions about it. Hit me up on Facebook personally if you like want to pick my brain on it, and we can jam on your specific scenario. Platta's fifth financial fundamental is separate yourself. This is like a mental separation of you and yourself. Know that you are two different people. You are a CEO and you are an owner. We so often get caught in the trap of saying, I'm an owner operator. It's like, those are two fucking different things. Like, you put them together, doesn't mean it's one thing. Super important. This kind of goes along with being taxed as an S corp, which is like, you as the CEO have a job. People with jobs get paychecks. Caden, have you ever done a job and not gotten a paycheck from an employer?
Like when I was an employee?
Yeah.
No.
Okay, good. You also shouldn't have a job working for yourself and not get a paycheck. Like, you are the most expensive employee in your business. You sure as hell better get a paycheck for it. Now, have you ever owned stock in anything?
I can't say I have.
Okay. Well, we were talking earlier about buying small businesses, right?
Uh-huh.
So if you invest in a small business, but you're just an investor, would you get a paycheck for that?
Not a paycheck, but maybe distributions.
Exactly. I like to say, like if you own Amazon stock, just imagine you're a shareholder of Amazon. Would Jeff Bezos call you on a weekend and be like, yo, Caden, I'm gonna need you down at the warehouse down here. We got these boxes to move. We got a lot, right? Like, no, the owners don't get a phone call. The owners don't have a job. The owners don't have a paycheck. Ownership is just putting money into something, and your money is the thing that generates a return for you, right? You don't lift your finger, right? In our businesses, we are both of those people. We are the owner, we are the investor, we are typically also the operator. Us as an operator needs to get a paycheck for doing a job, partially because we are the most expensive employee probably, and so we should reflect that so like we don't look free. So often we're free to our business, and I see this all the time where people won't take a paycheck. They think they're making a lot of money in their business, and then they go to hire somebody else. They hire a new technician or they hire administrative help, and all of a sudden they're like, shit, there's no money left. It's like, no kidding. Like, you were the one making that paycheck. Now you're paying it to somebody else. There's no money left for you as the owner because you weren't actually profitable. You were just making enough money to write yourself a paycheck. You took it as profit. You took it as distributions rather than a paycheck. Now that you hired somebody else to go do that work, there's no money left for you as the owner, which sucks. Because like part of the fun of owning a business is to grow it to the point where you don't need to be there anymore, right? You can hire a CEO and you would actually know what to pay them because you would have been paying yourself to be the CEO. And then when you hire them, you would pay them that. You're still the owner. Ideally, in like our pressure washing companies, if you're newer companies make a shitload of profit because they don't have the infrastructure. If you're scaling, the faster you grow, the less profit you make typically. So like if you're making 10% profitability as you're growing fast, that's usually fine. Steady state in a pressure washing business, you probably want to be closer to 15 to 20% like net profit after all the expenses. It's hard to be that profitable if you're growing really fast because growth is expensive. But you want to have a stable pressure washing business where you can pay somebody else to run it and you can sit on a beach or out in a tree stand. Probably I'd be in a tree stand, you'd be in a tree stand. Somebody else might want to be on a beach. I guess depends if the fishing is good on that beach.
That's true. That's true.
But you want to be doing whatever the hell you're doing and still getting mailbox money, right? Still getting distributions as an owner. And it's important to build a business where you get both, right? Where you're an owner, you have an investment, but you also oftentimes, for us, are a CEO and have a job. So those are my 5 financial fundamentals. Separate business and personal. Don't be afraid to use debt wisely. What was the next one? I think it was keep your accounting system, keep your QuickBooks and your CRM separate. Be taxed as an S corp. That's 4 things. And 5th is and then I have this broken ass pinky from an old football injury. It's pretty sweet, huh? That's as straight.
It is.
That's as straight as that son of a gun gets. My other one's fine. I've like 9.5 fingers. I'm like 9.5 fingers is what I got.
It still works, right?
Yeah, it comes in really handy like when you're drinking something because it creates a nice stable base at the bottom of a cup. But yeah, so and then 5th is just make sure you know when you're the owner and know when you're the CEO and make sure that both of your personalities as a business operator and owner get paid.
Yeah. No, that makes a lot of sense. I will ask some questions about those. So more so on like the last one where you talk about separating and paying yourself as the operator. Say I'm just starting. Do I do that immediately or should I wait for a certain point?
I think that's where it ties into when's the right time to be taxed as an S corp. And it usually is around when you hit $100,000 in revenue. And then your business is making enough net profit where doing the S corp tax status thing is going to save you some money, which then like part of the legal requirement of that is you have to take a reasonable wage. So you have to put yourself on payroll. It's got to be reasonable meaning like what would you have to pay somebody else to do that job? There is kind of a double-edged sword there that's kind of funny, which is ideally you want to pay yourself as little as possible as a wage. Again, back to like what it means to be taxed as an S corp. The wage is now what you pay payroll taxes on. And so your brain immediately goes to like, well, I'm going to pay myself $5 a week, right? Like, how am I going to avoid paying as much in payroll tax as I can while taking the smallest wage possible? That obviously wouldn't be reasonable. And so you don't want to do that. The IRS will show up at your door, and that's not a person that you want showing up at your door. So it's like, it's got to be a reasonable wage, but you kind of want to justify it as low as reasonably possible to avoid paying extra payroll taxes. And you also want it to be representative roughly of what you'd have to pay somebody else so that when you do go and hire a technician to replace you, a salesperson to replace you, a general manager to replace you, that cost is built into your business model. If you grow a business and you don't have those costs represented, like I said, you're going to get to a point where you go like, oh shit, there's no profitability left. I didn't charge customers enough. I didn't set up the business dialed in enough to be able to generate a profit for me as an owner. And now I just hired a bunch of people to run my business. They all get a paycheck and there's no money left for me. That'd be a pretty shitty business to be an investor in.
It would.
So
I wouldn't get many investors.
No, you'd be the only investor in that shitty business. Yeah.
Yes.
You'd be stuck with it.
Yes, for sure. Awesome. Well, yeah, I definitely appreciate you sharing those. Another question that I get asked a lot, that I hear a lot, is around how to price. And in my opinion, this comes down to obviously understanding your numbers, knowing your expenses, stuff like that. Obviously, there's different things where being like the premium leader and the low cost leader, things like that. But at the end of the day, it does come down to
being able to know your numbers, know your expenses, and run a profitable company, whatever model you choose, right?
Yep.
So can you walk through what numbers are, what do you need to know to actually figure that out and be accurate enough to have a price that, you know, covers expenses, is profitable, so on and so forth?
It's funny because there's two different logic paths that have to meet in the middle when you price. I'd say the most important thing when you price anything is to not, we tend to want to start at what does it cost us to go do this, and then we'll like figure out what to charge on top of that. One of the challenges is when we first start our business, our costs are really low, and again, we might look free because we're not paying ourselves a wage. It causes us, you see the $99 guy out there all the time, like he didn't know how to come up with a price because he just looked at what does it cost him to do it. Hardly nothing. So he charges way too low, right? You can't grow a business charging that. There's not enough money in it for what it's actually going to cost you as you grow the business. A better place to start is what is it worth to the customer, which that's a little trickier to figure out. The best way to figure out is to literally call your best competitors and ask them. Now, you might be like, there's no way they would tell me. But if one of my competitors in Minneapolis here asks like, Dan, what do you guys charge for a roof wash? I'd be like, we charge $400 and you better be charging the same. Cause if you're charging 200, you're going to make us all look like assholes. Yeah. Right. And so your good competitors that are running really good, stable businesses want you to charge more. Yeah. Because if you don't, you're fucking everything up for everybody. Right. And now you're not making enough money and you're making the industry look really bad. So I'd say the place to start and figure out what to charge is look at the biggest companies in your area and figure out what they're charging. It might make sense. Now, like they have a value proposition that you might not have, right? They have this insurance and they got this equipment and these trucks. You have a value proposition that they don't have, which is your customers probably get to work with you if you're smaller, right? And that's valuable to a lot of clients too. Now, you can't scale a business on that value proposition, but like when you're there and the customer's like, well, I talked to these guys and here's all the things that they offer, you better know what your value proposition is. And what you offer might be like, hey, I'm not sending out a bunch of 20-year-old dudes that they just hired yesterday, which is who these guys are going to send you. Yeah, they're a big reputable company, but they just hired a bunch of 20-year-old dudes and put them through training and you're getting a bunch of trainees. You're going to get me and my helper, and we've been doing this for this long, right? If you're a smaller company, that's your value proposition. It doesn't mean you should charge less than those guys, right? You should probably charge about the same. Maybe you charge a little bit less, so that's an angle. Maybe you charge a little bit more and say, I need to charge you more. You get me, right? Yeah. So like you're not getting a bunch of 20-year-old trainees. You're getting me, so I'm going to charge you more. But don't look at what your cost structure is and try to build a price up from it, especially if you're early on, because your cost structure doesn't have most of the costs that you're going to have. Eventually, you're going to have a bunch of labor. You're going to have a bunch of training expenses to build that labor. You're going to have a bunch of tools and equipment because these guys that you hired are breaking all of your stuff, and you need to charge that through to the customer, right? All the materials, all the marketing spend. In our business, we spend 10 to 15% of our revenue on marketing. The clients have to pay for that, right? We have administrative people, we have salespeople, we have a big office space that we rent in a warehouse. And then we have tons of recruiting spend that we do. So like you need to charge enough you don't have all that stuff at day one. You still need to charge for it because someday you're going to have it. And if you don't build it in your price right from the get-go, you're going to be hosed because it's hard to raise your price from $99 to $399. You're better off just starting at $399. Not to say you shouldn't verify it, right? Charge what the market will bear, figure out what that price is. You can still go through and verify it, but just because it only costs you $50 to go out and do a $500 job doesn't mean you should now lower your price to $250 or $100, right? You need to keep charging what the market will bear because eventually you're going to stack up all these expenses to go out and execute that. In pressure washing specifically, again, assuming that you're either paying somebody else to do the work or that you're taking a reasonable wage to go do the work, you should generally charge enough that your what I would call cost of goods sold, this is like nerdy accounting talk, your cost of goods sold, meaning the labor to go out and do it, what you would have to pay an employee to do it, plus training wages, right? Like that's got to be in there, plus the payroll taxes, plus the workers' comp. What's that fully loaded spend for labor to go out and execute that? the fuel to get out there, the merchant processing to charge their credit card, the damages and repairs, because Mrs. Jones is going to call back and say you burned all of her plants, and it's going to happen like at least once a month. And then all the supplies and tools and equipment and the equipment rental and all that stuff. That bucket of expenses, cost of goods sold, the direct cost to execute, should cost you about 40% of your revenue. So if your average job size is $1,000, in general, you're spending about $400 to go execute the work. And now that might seem like you're gouging. If you don't have any infrastructure in your business, you're like, I'm going to charge them $1,000. I'm going to make $600 every time I go do a job. It's like, no, because you're going to spend 10 to 15% on marketing, probably 15 to 20% on admin people, another 10 to 15% on infrastructure. Do the math. There ain't much left for you as the owner, right? And your wage is somewhere in there. If you're out in the field, your wage would be cost of goods sold. If you're in the office, your wage would be an admin. But again, you need to get paid for doing a job. And there has to be money that flows to the bottom line for you being an investor in this business. You got to get paid twice. You're taking all the risk. But I would say price based on what the market will bear, verify it in that your price should be high enough that when you go out to do work, the labor, the fuel, the supplies, tools, equipment, chemicals, all that stuff in total costs you about 40%. If you're at 45, that's cool. Somewhere in the 40 to 45. If you start pushing 45 to 50, you're either not charging enough or you're not efficient when you go out to clean stuff, right? It might just be that operationally you're shitty and maybe your price is good, but your operations suck. And again, then go back out and verify, like, what is the market price? What are the best companies charging for this? And if your percentage is too high, then you got to look at paying your employees different, setting your trucks up different, whatever the case is.
Yeah, no, I appreciate that. That was very insightful for sure. So I will ask, and I think you've kind of touched on some of this, but I'll just ask it more outright. What are some of the biggest mistakes that you see smaller power washing companies make when it comes to bookkeeping, finances, accounting, that stuff?
I mean, the number one mistake they usually make is they try to do it themselves. I'm a big believer in working at your apex, which is, especially if you're a business owner, the beauty of being a business owner is you do whatever the hell you want. If you don't like your situation or your business, go look in the damn mirror. If you don't like your employees, go look in the mirror. You created all this. So like anything you don't like in your business is your fault, right? Also, it's your opportunity. So what I tend to tell people is like you have three things that you need to do all the time for yourself. The better you do this for yourself, the better you end up being as a leader, as a dad, as a wife, as a whatever other roles you play. But super important that you spend most of your time working on stuff that you love, right? So that's where I'd say like most of you should not be touching your QuickBooks because you don't love it. And you're a business owner and you get to choose what you do. So if there's something you're working on that you don't love, holy shit, delegate it, right? Second is it should be something you're really good at, right? Like if you love underwater basket weaving, Caden, which I know that you do, but you suck at it, like then it's for sure a hobby,
Yes.
Then it's just a hobby. But you got to be really good at it. You got to love to do it. And if those two things don't match up, it's probably not something you should be spending a lot of time on. And the third is, what do you get paid the most to do? What's the most valuable thing in your business? It's probably not jumping into your QuickBooks. Again, just another reason to delegate it. And it's pretty cheap to delegate. So focus on what you love to do, what you're the best at, and what you get paid the most to do. In a lot of our businesses, that's for a while, that's being out in the field. And there's all this like goofy pressure to get off the truck. And at some point, that's the right move. That point is different for everybody because everybody's answer to what do I love to do? What am I really good at? And what makes the most amount of money in my business? Like in our businesses, what makes the most amount of money until we're doing like 700,000 to 800,000 is probably the lead tech. Like that guy generates the most amount of revenue, not the salesperson, not the admin person, not the bookkeeper. The lead tech is probably your most valuable employee till you're at 700,000 or 800,000. Now, like you might delegate it sooner than that to try to get off the truck because you're not good at it or you don't love it. But if you love being in the field and you're really good at it, it is the job that pays you the most for a while. You can still run your company from the truck. You can run it from the office too, but just know that the office job, you can hire somebody better than you for way cheaper than you usually. And then you can stay out in the field and grow the business faster and make more money for yourself and your family and your friends, whatever. So back to what I see like people do from a mistake standpoint is they rush to get off the truck because there's this like message that we all get that if we're going to scale a business, we can't be on the truck. It's like, no, like that's a good job for a long time and it pays you really well. That's where most of the money is. So at some point, yes, you can't grow a multi-million-dollar business if you're on the truck every day, but for a long time, it's okay to be on the truck. That pays you well. Like hire somebody else to do the office stuff because you probably suck at it. Just speaking from experience. The second thing that I see guys do just awful all the time is they buy equipment for every other job. Like they buy a new piece of equipment and they justify it mistakenly. Oh, I got this $5,000 job, needs a $2,000 piece of equipment. Well, I'm still going to make $3,000. No, you're not. Because again, you have to pay for wages, you have to pay for fuel, you have to pay for the chemicals and the other tools equipment, you have to pay for the marketing and the admin person. Now, again, you might not have all these expenses yet, but that doesn't mean you should not charge enough, right? And so guys will justify buying new pieces of shiny equipment because we're dudes and we like our toys. It's just us, right? It's especially like if you're running a pressure washer business, guilty. But again, the truck and the equipment doesn't make us any money. The dude and the customer make us money. In manufacturing, they like abide by the 80-20 rule, which is like if you're going to put in a manufacturing line, that thing has to be running 80% of the time. And they like run it all day, right? They'll do first, second, third shift. Usually third shift is like a maintenance crew, and they'll shut her down for like half the shift to do maintenance and whatever else they need to do so that when first shift comes in, it's back and like new batches are running or whatever. They'll have like that 20% for maintenance and turning it over to run something different. There's a reason why they do that. Equipment's really fucking expensive. And if you buy new equipment and it's sitting there not doing anything, you are the shittiest manufacturing company in the world, right? And so if you just end up with a bunch of assets that don't produce, like your cash flow is all tied up in things that aren't making you any money. So don't go buy new shiny toys. Spend your money on marketing for the type of customer that you already have the equipment for. If you're going to go buy a new piece of equipment that's over a couple grand, like you better have a strategy to go sell a whole lot of that. So that thing is being used every single day, 80% of the time. If it's not being used 80% of the time, either rent the equipment or just don't serve that client. Like that's not your bread and butter. Unless you know you're going to get into it and know you're going to keep using it, don't buy the shiny toys.
Yeah. No, that makes a lot of sense. And I will say, I learned a lot by looking outside of our industry specifically, by going and looking at other industries and how they do things. So it's funny that you brought that up about manufacturing. But yeah, no, I've made some of those mistakes as well. So I'm
realizing I didn't really answer your question that well. Like those are financial mistakes that I see people make. On the bookkeeping side, the number one mistake is that they just try to do it themselves.
Yeah.
Right. And so unless you love it and are good at it, probably don't do it. Also be careful. It's so easy to delegate to like your mother-in-law or your girlfriend or just somebody that says they can like categorize stuff in QuickBooks, but know that there's a difference between just like an office admin person and somebody that actually knows accounting. Right. So I see that happen all the time is like a small business owner will give it to somebody that they know to do administrative stuff. And accounting is a goofy enough language. Like you need somebody that actually knows accounting to be able to do it. 99% of it you can do by clicking the button. It's the 1% that you're really royally going to screw up. And that's going to cause you data issues. And it might cause you issues with the IRS, which are not worth all of the disaster that can be.
Yes,
so,
for sure. Yeah, no, that definitely makes sense. And the whole who, not how concept. You know, there's books about that and stuff, and that is super important. And it's easy to fall in the trap of just figuring out how to do it ourselves versus finding someone that already knows how to do it, has put in enough time to be an expert, and just do it for you.
Yep. We all fall in that trap. I mean, that's why we're small business owners, right? We have like this itch to do shit for ourselves. And so it's a challenge that we have to delegate stuff. And I'll be honest, like I suck at delegating stuff. I don't like delegating stuff. I do like doing stuff myself. it's a fight. It's a battle that I have to like fight with myself all the time. There's all these situations, right, where there's like, oh, by the time I explain it to somebody, I might as well do it. And they can't do it as good as I can do it, right? We just get in our own way of delegation. In delegating, we also always tend to be like, okay, fine, here you go. But like we don't actually set them up for success. Like delegation is not just like turning something over to somebody. Like we have to give them instruction and train them. So I'm not trying to downplay it. Like delegation can suck, but it is also our pathway to growth. And so it's like a funny skill set that we suck at in general as small business owners, but it's probably like the number one thing we need to get good at to like unhinge growth is figuring out how to delegate and enable people to do the job for us so we can be a little bit more of an owner, a little bit less of an operator maybe.
Yeah, no, that makes perfect sense. And you touched on this point a little bit earlier, but if you could break it down all at once as far as where the percentages of expenses should be, just as an easy recap for that.
Yeah. So, and I love breaking it down this way too, because business owners are like afraid of their financials so often, right? And it's because the only financials they know are dealing with their CPA, and we all hate that. I hate that too. You're not alone. I hate that too. But generally then when we look at a profit and loss, it's like revenue, 70 billion fucking line items in the net income. And all that happens is we look at the revenue and we look at the net income, and everything else is just like holy noise, right? Like we don't want to get into all those weeds. And it's because it's not organized in a way that helps us make decisions. So it's super important to me that we organize stuff in these groupings of decisions. And my buddy Ben, who's in Minneapolis here, has a sewer and drain cleaning business, and he's like 99% of us. He hates looking at this stuff. Right? It's just like, it's a foreign language to him. I said, Ben, we're going to put this into 5 groups, and you're never going to look at a single detail of it, but it's just 5 line items you need to look at with a target percentage to have. And he's like, well, I can look at that. Right? Like, and all I need to know is like, what's the target percentage on that? And if I'm high or low, and then if I'm low, cool. And if I'm high, well, like depending on how off I am, like maybe I'll dig into the details, or maybe I'll at least like assign somebody on my team to dig into the details. But it just makes looking at our financials so much easier than looking at this huge stack of data when it's literally just 5 numbers, right? Like we can all look at 5 numbers.
Yeah.
I'll prefer to look at 5 numbers, honestly. So the first one is cost of goods sold. Those are all your production related decisions, which we talked a little bit about earlier. So that's your labor in the field. It's the wages, it's the payroll taxes, it's the training, it's the workers' comp, it's whatever's going on out in the field from a labor standpoint. It's fuel, merchant processing, damages and repairs, kind of like other necessary costs of production. And then the tools and equipment on the truck, the supplies and chemicals that, get used up at the job, and any equipment rental to make that job happen. So I kind of break it into those 3 groups, but it's all cost of goods sold. It's all money we're going to spend to go out and do Mrs. Jones's job. And in general, in a pressure washing business, we want like world class would be 40% or better, but like you can live with 45%. So if you're in the 40 to 45% on that spend, you're in the wheelhouse. If you can get down to 40, that's super cool. What's important to me is that you know what that number is and you make it repeatable. It's really hard to scale a business if one job you're at 55% COGS and the next job you're at 35%, and then the next week you're running at 65%. Like if it's super variable, it makes the rest of these expenses or investments that you have hard to make confidently, because you don't know how much money you're going to make when you go out to do a job. So one of the, I'll just tangent for a second here. Super important to me in all of our businesses is that we pay commission style pay for technicians. It's got to be performance-based pay, commission style pay, hourly plus bonus, but it's all calculated based on how much revenue they produce, and some way that you can guarantee that when you go do $1,000 job, you're paying about $400 to $450 in expenses, and the business gets to keep $550 to $600. That needs to be the same every single time, whether it's $1,000 job or a $10,000 job or a $300 job. That percentage has got to hold. The reason why it's so important if that percentage holds is the money we have left after we do that job is called gross margin. And that amount of money is what we have as a business owner to reinvest in the business. And again, if we don't know what that is, it makes it pretty damn hard to know if we can invest in our business or not. But if we have that COGS dialed in, way easier to invest in our business. So now we have 4 different investments. and I'll give you percentages to spend roughly on each of these investments. These are guidelines, right? Because not every business is the same. What's important to you and how you want to grow the business might be different than this guy or that gal or whatever the case is. So these are guidelines, and you can kind of take them and leave them as you see fit. But the important thing is, like, if you're going to take some money out of this bucket and put it into this bucket, like, the total of these buckets still has to add up, right? You can't be like, oh, I'm going to spend more on that. I'm going to spend more on that. I'm going to spend more on that. It's like, well, now there's no money left for you, right? Again, like, there needs to be money that trickles down through the bottom of this for you as the owner sitting on a beach somewhere. So the first investment you make is your marketing and advertising. And that's a bucket of investment expenses. It might be ad spend, like Google ads, Facebook ads. It might be SEO labor, or some other like contractor, the person that runs your ads or something like that. It might be software. We use Sotellus to get Google ads. We use Responsibid for online pricing. There's other softwares out there. I think we use Company Cam for like taking pictures of stuff as part of like our sales process. There's software that's really geared towards that client acquisition piece of our business. If it's related to getting leads in the door, it's in that marketing and advertising bucket of investments. In general, I'd say 10% is a pretty good number for that. In our business, we push 15%. We used to. We actually backed off on it this year because we started spending more on the second investment, and these can kind of be a little bit interchangeable. The second investment we make is in our administrative people, our administrative infrastructure, salespeople, customer service people, business owner, CEO, leader, nerdy bookkeeper, anybody that's behind the scenes, not out doing work, but making like the schedule happen, right? Turning the screws, turning the bolts behind the scenes to make the work happen, to fill up the schedule, to organize the work, to measure the work. That's all your administrative infrastructure. In general, I want to spend about 15% on that. That's really hard to do as you scale the business. Usually, like, our wages, the owner goes in there because it tends to be, as we scale the business, we're not out in the field anymore. If you're in the field, your wage should be COGS. And maybe you're in the field half the time. You should actually split your wage between the two. We do that with a bunch of our clients. So, like, where you're at in the business and what you do kind of dictates where your wage falls. But that administrative investment can oftentimes be a trade-off for marketing, right? We used to spend a lot on marketing. I think we spent 170 grand last year on it, but we had like 70,000 of that we just lit on fire and burned to the ground. It was like radio contracts that we had. Like literally 70 grand. I think we got 20 leads. Our average job size is $400. Do the fucking math, right? It was R&D. It was some things we tried that didn't work out. We said, okay, that didn't work. Let's get some salespeople, right? Try to get our average job size up. So we actually took some money out of marketing and put it into admin. So now our admin's closer to 20 to 25%, but our marketing's down to like 7. So there's some trade-offs you can make. Again, you can't like outspend in each bucket, but your strategy might dictate a little bit different numbers. But I'll say around 10% marketing, around 15% in admin. Then you get down to your fixed infrastructure investments. This is where bookkeeping gets really boring. So fixed overhead, fixed infrastructure is like your rent, your utilities, your liability insurance, anything that's like a recurring bill, right? Your phone bill, your internet bill. We try to spend like 5% on that, which when you're small and you don't have a location, you're going to be way below that. The minute you rent a location, you're spending 3% of your revenue on that. It's like, holy shit. And then you got to grow your way in to be able to afford that location. 5% is the target as you scale. But I'll tell you, like, every time you get close to 5%, you're like squirming at you're like exhausting all of your space. And then you go rent a bigger space and you're up to like 8%. And you're like, oh shit. And then like, you can't pass that on to a client, right? Like, you can't go to Mrs. Jones and be like, hey, Mrs. Jones, our price was $500, but we just rented a bigger location. So I'm going to charge you $600. Mrs. Jones would be like, sorry, like, that's your problem. So infrastructure is funny like that. It's a necessary evil. It's expensive and you can't pass it on to your clients. They don't give a shit what your office space looks like, right? It might help with employee retention and recruiting and stuff like that. So it's not a worthwhile investment, but it's expensive. So you have that group of investment decisions. It's all like proactive, locked in monthly payment type of stuff you sign up for. Spend around 5% on that, which is really hard to do as you grow. The last one is your variable overhead expenses, which are one-time investments and random ass things. It's kind of like the catch-all for everything else, but it tends to be one-time decisions that you make. Repairs and maintenance is the biggest one. Something might break. Today you fix it with duct tape. Next week it breaks and you're like, man, we got to like buy a couple tools and we're going to wrench on this stuff ourselves. And then the next time it breaks, you just take it in, right? Every time it broke, you had the opportunity to make a new decision. And that decision might have been based on how much time you had available, what your skill sets are, whether you like wrenching on it or not, whether the guy at the shop could even get it in and maybe he couldn't, so you had to wrench on it yourself. And the next time it breaks, you're going to make a whole new decision again, right? So you're never like locked into something. It's this like reactive decision of like, oh shit, this happened and we got to fix it. It can also be opportunistic. Things like the huge convention that we just had a month ago. Are you going to go? What's the ticket cost? What's the flight cost? What's the hotel cost? If you're hanging out with me, what are the bush lights cost? And so when you spend money like that, right, it's like just because you went this year doesn't mean you have to go next year. Just because you didn't go this year doesn't mean you have to go, whatever the case is. And so it's a variable expense. You get to decide how frugal you want to be. Recruiting falls in there. Employee engagement stuff falls in there. Like, you're going to throw a big party for your employees at the end of the year. You're going to pay them a little bonus. What are you going to do? Maybe nothing. So it's variable, right? You can change it tomorrow. And just because you spent the money yesterday doesn't mean you need to spend it again tomorrow. You're not signed up for anything. So again, all of those are different investments. And I said investments a few times. I'm just going to hammer that home one more time. Cost of goods sold at the beginning, that's a true expense. You go out and do a job. You go do that $1,000 job for Mrs. Jones. You're out about $450. You can't do Mrs. Jones's job without spending that money. You wouldn't have gas in your truck. You wouldn't have the chemical to spray. You wouldn't have the employee to send out there. You can't do a job without spending the money on cost of goods sold. That like $600 that you have left, you're now playing owner. What are you going to invest in? Do you want to put more into marketing? Do you want to hire a salesperson? Do you want to expand your location? Are you going to go to an industry event? There is no wrong answer, right? You got to decide how you're going to invest your money back into the business. Are you going to, go get a new tree stand? And because it's about that time of year, you might end up investing in a new tree stand. I'm just saying, these are decisions I have to make. But so it really, like, the bottom of the P&L turns to different investments. And that's where it's so critical to have those 4 groupings, because if you don't love looking at a P&L, it's way easier to just be like, how am I doing COGS? What's my marketing percentage? What's my admin percentage? When you only have 5 line items to look at, you know if you're on track in 2 seconds.
Yeah. Yeah, it makes it a lot simpler to get a broad overview without having to look at every single line item like you talked about. So, yeah, no, I appreciate you breaking that back down. That's really all I have. So if you have any like last minute tips, advice, anything like that, please do share.
Man, I would just say, make sure you're separating yourself from your business, right? Like, legally with an LLC. When you start making over $100,000, start thinking about doing the S Corp thing. And I know that's like a little tricky to understand. So if you're watching this and you're like, what the hell are you talking about? Hit me up on Facebook, just DM me and we'll nerd out on it. And it's like, it's one of those things where it's like, you need to understand it, but you don't need to be the one doing it. Right. I can do it for, like, from a bookkeeping standpoint. You can obviously hire me to do it for you. You can hire Blue Skies to do it for you. They're awesome. You can hire Yeti Books to do it for you. They're awesome. There's a lot of like really good industry focused bookkeepers. Don't be afraid to delegate it, again, unless you love doing it and you're really good at it. But just like, as you're growing your business, keep that lens. What are you really good at? What do you love to do? What pays you the most? Figure out how to delegate everything else. Get really good at delegating, right? Again, like, I suck at it. I'll be the first to admit. I hired my first bookkeeper in my new business today. I'm like, oh, damn it. Like, I already know all these processes I need to build. Like, when we get off of here, I got training videos up the wazoo to make for them. Got to delegate.
Awesome. Well, I appreciate that. And how can people get a hold of you if they have questions, want your services, that stuff? Obviously, I know you mentioned Facebook Messenger. Is there a website?
I don't even have a website built yet for Best Damn Bookkeeping. I have the URL, but I haven't built a website. I gotta get that done. For now, just hit me up on Facebook. Just shoot me a message. I'll shoot you back my Calendly link. And I can drop, Caden, I'll give you my Calendly link to drop in the feed on this. So if people do want to just jump on my calendar and book some time with me, it's super important. And again, like, back to kind of the whole point of doing this being to help business owners make decisions. When I do a demo, and you know this because you were a bookkeeping client of mine in your previous business, I spend like an hour on that demo. It's not just like, hey, sign up for bookkeeping. It's like, we're going to go like nuts and bolts through your business and start turning some screws on it. So if you want bookkeeping help, it's going to be an hour with me. You're going to get bored to death by me. But we're going to look at, should you be taxed as an S corp? We're going to look at how are things organized. We're going to look at how screwed up your stuff is. Or if you just want to pick my brain, there's like a link to grab. I call it a 15-minute quickie because I thought that'd be fun to name it that. So you can always grab me for a 15-minute quickie on that same calendar link, and we'll nerd out.
Heck yeah. Well, I appreciate that. And yeah, we'll leave that below. So if anybody wants to reach out, they can reach out to you directly. But I appreciate you coming on.
Heck yeah, man. Anytime. Like I said, that's as everybody's growing their businesses, we're gonna have to do another one of these and talk about the purgatories and why when you get to $1 million, you're not actually making any more money than you were at 200,000.
Yes.
It's for a different time and a different day. Yeah. Yeah. Not a bad thing. It's not a bad thing. It's just unexpected. It's just usually unexpected.
For sure. Well, thank you, sir. I do appreciate it.
You bet. See you guys.
I hope that video was super helpful. If it was, feel free to jump down below, let us know about it, like the video, please subscribe. And if you want more, you can check out our membership or some of our free resources below. So go ahead and do that. But other than that, we'll see you in the next one.